Hey everyone, Happy New Year and welcome to 2023. This is going to be your first week of trading. This is your weekly market outlook for the 2nd to the 6th of January 2023. My name is Vito and let's just get this started. Quick recap of what really happened in a very quiet week last week. Very calm last week of trading in 2022. A lot of the instruments are pretty much range bound. More details have actually emerged on Bank of Japan bond buying purchases at 24 and 30 basis points. That was newly scheduled on top of the scheduled unlimited bond purchases at 50 basis points. Previous intervention by the Ministry of Finance in Japan was actually advised by Bank of Japan, and the execution of the intervention was done by Bank of Japan. So Bank of Japan advised MOF instructed Bank of Japan to intervene, then they executed the intervention. So this actually highlights more evidence as Bank of Japan moves away from an ultra easy monetary policy stance, and we'll definitely have a look at that in the yen crosses today. All right. So what's in for this week? Yesterday we have the Indonesian inflation rate that was higher than expected. Other than that, we have the global manufacturing PMIs that's really more in line with market expectations. Still all below 50. Some of them see improvements like in France. Some of them remains the same as in Italy. Germany saw a little bit of a drop in the manufacturing PMI. Overall, the Eurozone manufacturing PMI remains new. An improvement there. All right. So for Tuesday, several data here. We've got the Germany employment numbers, but I think the one to watch out for is definitely the Germany inflation rate. Again, this is going to be expected to drop down from 10% to 9.1%. That's the consensus. So throughout the weeks, we're going to see inflation rate coming out from Germany, Italy, France, and ultimately we are going to be focusing on the Eurozone inflation rate. So this is on Tuesday. On Wednesday, French inflation rate expected to go up a little bit from 6.2% to 6.4%. We've got the US ISM manufacturing numbers again below 50 and likely to maintain a position below 50. We likely see a drop to 48.5. Key points, we've got the FOMC meeting minutes. That's definitely going to be a market mover for this week, especially after 2 weeks of a very quiet market. The overall tone would be for the FOMC to kind of tone it down a little bit, not be so hawkish, but not really, pivot into more of a dovish stance. But this is likely going to affect how the US dollar is going to be. All right, on Thursday, we've got the Germany balance of trade, Japanese consumer confidence, Italian inflation rate, right, expected to drop down a little bit from 11.8 to 11.6. Got the US balance of trade and the Canadian balance of trade, but definitely the key events that all going to fall in on Friday. The Eurozone inflation rate, this is what the market is going to be looking at. Expected to drop from 10.1% to 9.7%, and on top of that, we've got the NFP numbers expected to gain by 200,000, lower compared to the previous 263,000, and unemployment rate likely to remain the same at 3.7%. Okay, ISM non-manufacturing PMIs still above 50, but likely to drop to 55. With that, let's just jump straight into the technicals, and the first thing to watch out for is definitely the dollar index here. We have seen the dollar index maintain a position below 105. We're looking at fresh movement to the downside. The stochastics is now crossed to the downside. We could potentially test 103, and if we break below 103, then the next stop is likely going to be 101. 50, 101, and then 100 on the dollar index. Again, this is likely going to be reflected on all the other currency majors as well. Aussie USD right now, it's testing 78.6%, around 68.50. On top of that, we have 69 cents. Now, 69 cents is going to be key because this is going to be the upper range of the resistance the upper resistance of the current range the Aussie USD is in. So if we do see a break above 69 cents, that could really push the Aussie USD higher towards 70 cents. Midway, we will have 69.50 as a resistance, but ultimately there's a potential for this one to return all the way up to 70 cents, 70.50 if it does break out of that 69 cents range. Right now, in terms of momentum, still pointing to the upside. The Euro USD, this one here, it's still range bound, so there's still going to be an opportunity on the Euro USD here. The momentum overall remains flat, but the previous 2 days on the Euro USD, so as it closes the year 2022, and when it first opened up again, it is actually testing 1.07 as a resistance. So what we're looking for is actually a potential break above 107. If it does break to the upside on 107, then the potential for this one would be towards 108, 109. This one we can position strategically. If there is a breakout above 107, then we will be looking at 106 as a key support on the Euro USD. So if you guys are thinking of potentially going long on the Euro USD, wait for a break above 107. If you're thinking of where you want to put your stop losses, you can do so at 106, 105. But the potential for this one here is that I think the market is waiting for a potential break to the upside for the Euro USD. Next one, it's going to be the Pound USD. The Pound USD, this one here, it's maintaining a strong support at 1.2050. So I think this is great if we see the year starts and price is still above 1.2. If it moves away from 1.2 and we're just waiting for the momentum to kick in, just waiting for more confirmation that this is oversold at 1.2. If it does bounce above 1.2050, then we're likely going to see further movement to the upside for the Pound USD, likely towards the upper range of the upper resistance of the range around 1.23 on the Pound USD. Okay. Next one, it's the dollar yen. So dollar yen has broken through 132 support, 131.50 support, 131 support. It has actually been pressured lower below 130 as the market really opens up today, and we've got that news coming out that we just discussed about how Bank of Japan is. So this is going to put a lot of strength on the Japanese yen, at least for the first part of the week. And if we see the new year opens below 130, then we're likely going to be looking at further progress to the downside for the dollar yen. So the theme is waiting FOMC minutes. With the FOMC minutes, waiting for more of a less hawkish comment from the FOMC, then we could likely be looking at a potentially weaker dollar throughout the week. So unless anything surprises on the FOMC meeting minutes, this is likely going to be the current momentum for the US dollar. That is likely going to be a weaker dollar for the start of the year. Okay, the next one, we're gonna take a quick look on gold here. Right now, gold it's actually in a very unique situation. We do have a little bit of an ascending rising wedge. We do have a little bit of a rising wedge. We have actually broken through above 1825. We need to maintain a position above 1850 for this one to actually run to the upside. If this week gold is still going to fail at 1850, then we could likely see that pullback happen back towards 1825 first, and below that 1825 obviously we do have 1800, 1795. But if it does close and maintain a position above 1850, then we will ignore the rising wedge, because this would transition the overall trend back to the upside for gold. Okay, so that's a very quick update for the start of the year. A very happy new year to all of you guys. Welcome back to 2023.